A little over a month ago, UnitedHealth Group stock was trading at almost $600 per share. However, over the course of the last month, this stock has fallen by over 50%. So today, I want to take a look at everything that is going on with this company. We're going to take a look at the bad news that has sent the stock lower. I also want to dive into some positive news that could potentially be a catalyst for this company moving forward. And then specifically, I want to look over their top line, bottom line numbers, as well as discuss some projections around where this company could be headed in the future and how that could affect their stock price. But before we go any further, if you do enjoy this video, make sure to drop a like down below and subscribe for more videos like this one. So as I mentioned, the stock is down over 50% in the last month. However, if we look at the last year, this stock has basically traded sideways in a range anywhere from $450 per share all the way up to $625 per share. If we look at the last 5 years, it actually gets a little bit worse because even though the stock is still slightly in the positive, really since 2022, prior to this drop, the stock had traded sideways. We're now sitting at levels that are equivalent to where the stock was trading back in 2020. So whether you're looking at UnitedHealth Group stock price before or after this large drop, it hasn't been a very exciting stock over the last 5 years. So there are a couple of reasons why UnitedHealth Group stock price has fallen in the last month. The most recent is their CEO actually stepping down for personal reasons. This came as a surprise to the stock market and sent the stock lower by around 22% in a single trading day. They did announce the replacement CEO being Stephen Hemsley, who was the former CEO of the company from 2006 through 2017. However, this did very little to calm the nerves of investors because the company also withdrew any guidance for 2025, saying that they were seeing the trend continue of patients needing more care. On top of that, the company said that it doesn't expect to get back to growth until 2026. And if this week wasn't bad enough for UnitedHealth Group, the DOJ actually came out on Thursday and announced that they are investigating the company for possible Medicaid fraud. The company did release a statement saying, "We stand by the integrity of our Medicaid Advantage program." However, this doesn't change the fact that this is the second time this year that the Medicaid Advantage business has come under fire from the DOJ. In February, the DOJ was conducting a civil investigation into whether the company inflated diagnoses to trigger extra payments to its Medicaid Advantage plans. And this could be a major issue for the business because their Medicare and retirement segment, which includes Medicaid Advantage, is their largest revenue driver, bringing in $139 billion of sales last year. So overall, we will have to see what happens with these cases with the DOJ. However, healthcare in this country has come into a lot of scrutiny in the last couple of years, and this has likely created a number of different issues around UnitedHealth Group. What we could see from investors is they sold off this stock almost immediately, again falling all the way down to around $250 per share. However, over the next day and a half, the stock did rebound almost back to where it was prior to this announcement. However, a major reason for this rebound in the stock price has to do with the fact that a few directors on the board and their new incoming CEO Stephen Hemsley have been buying shares of the company. Their new CEO acquired 86,700 shares at a price of around $288 per share for a total of $25 million of purchases. And with this purchase, it brought the new CEO's share count to over 600,000, now valued at around $173 million. The second big driver of their stock price moving down in the last month was the announcement of their earnings. They reported their earnings back on April 17th, and they came through with very slight misses, only 1.28% for EPS numbers, reporting $7.20, and for revenue, they only missed by just under 2%, reporting revenue of $109.58 billion. The problem actually came in with what the company provided for guidance for 2025. During Q4 of 2024, back on January 16th of 2025, the company actually reported guidance for the year that they were expecting EPS numbers to come in around $28 per share or $29 to $30 per share on an adjusted net basis. And now in their most recent earnings announcement on April 17th, they actually adjusted their their 2025 guidance down in a significant way. They were now expecting their net earnings to come in around $24 to $25 per share and adjusted earnings to come in around $26 per share. This was a drop of nearly 15% in their expected earnings for 2025, and this was due to a heightened level of care needed for patients. And during this earnings announcement, they had put the statement in that the company believes that these factors are highly addressable over the course of this year, as well as looking ahead into 2026. However, with the leaving of their CEO, they have pulled their full year guidance for 2025. And the reason for this is, despite the company saying that these factors are highly addressable, they are still seeing patients need a heightened level of care in Q2. I will say that UnitedHealth Group as a whole has very impressive numbers. This is their top line revenue, and you can see that quarter over quarter, they just consistently see their revenue increasing, and it's increasing by around 10 to 15% year over year. Their current trailing 12-month revenue is sitting at $410 billion. And this trend actually is very similar for their bottom line numbers. If you took out this one quarter where they reported negative $1.53, you actually see that they have a very solid uptrend for their bottom line EPS numbers. Their current trailing 12-month EPS is sitting at $23.89. So keep in mind that that number is a GAAP EPS number. Here on Yahoo Finance, they have their non-GAAP EPS, and in 2024, they put up $27.66. For 2025, analysts are only expecting them to put up $23.45. And then in 2026, they do expect a turnaround for the company to get back to growth and put up around $27.70 of EPS. According to Yahoo Finance, right now UnitedHealth Group's forward PE ratio is sitting at an 11.51. If you run it based off the numbers, it's actually closer to a 12.27. But either way, if you look over the course of the last year, this company reasonably trades around a 17 to 18 forward PE ratio. And really, this deeply discounted valuation is why UnitedHealth Group is a very interesting company right now. Even if they underperform in 2025 and only put up $20 of EPS, if the company were to trade at a 15 forward P ratio, that would still result in a stock price of $300 per share. However, if they put up inline performance of $23.45 and again trade at a 15 PE ratio, that would result in a stock price of $350 per share. What I think is probably more reasonable is again them getting back to this 18 forward PE, which would result in $422 per share. In a scenario where the company outperforms in 2025 and puts up $25 per share, and again trading at a 15 PE ratio, that would result in a stock price of $375 per share. If it were to trade more likely at an 18 PE ratio, that would create a value of $450 per share. But let's just say Q3 and Q4 roll around and the company starts looking at 2026 and they see projections of EPS coming in around $27.70. That is in line with what analysts are expecting in 2026. That would result in a PE ratio of 10.38. If we assume the stock during that scenario would trade at a forward PE of around an 18, that would result in a stock price of $500 per share, or a 73% return from the current stock price. And that's why I'm considering adding it to my portfolio. This is the YouTube portfolio. It's currently sitting at a value of just over $65,000. And honestly, what I'm considering doing is selling out of Visa and moving that money into UnitedHealth Group. Because at the end of the day, Visa is a slow grower. It goes up by 10-15% a year. That is kind of what you can expect from the stock price. However, UnitedHealth Group in the next year and a half could go up 70+%. And that obviously offers a much better return than Visa stock. I haven't decided on that quite yet, but that is just something that I'm thinking about moving on with this portfolio. I also hold Google, Supermicrocomputer, AMD, Microsoft, Adobe, SoFi, PayPal, Alibaba, Palantir, and Apple. And on top of that, I do have $16,000 of cash on the sidelines. I don't want to put this into UnitedHealth Group because I actually have some plans for what I want to do with this money. So make sure to stay tuned for that. But don't buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well well as your time horizon. If you enjoyed the video, make sure to drop a like down below and subscribe for more videos like this one. And as always, guys, have a wonderful rest of your day. And for the joke of the day, what kind of shoes do ninjas wear? Check the comments down below for the answer. Thanks for watching.